Hello and welcome to another edition of the Leverage Podcast. I'm Paul Richard, and we have a special guest with us today, Michael Duncan with USA Mortgage. Thanks for coming and being with us, Mike.
Well, thanks for having me, Paul. I appreciate you asking me to be on the show.
It's awesome to have you, and we've met through some networking groups that we've been in, and so I'm excited to have you on. I like to feature business owners and those that are working in franchises, et cetera, to give us a better view of what you guys do, and give us a little background about you, Mike, and how you got into this business.
Well, so my background, I do have a degree in finance at MSU, but so SMS.
There you go.
But after that, I kind of bounced around, and I had a friend that started Cornerstone Mortgage back in the late 1900s, early 2000s, that asked me to come work for him. And I had an ankle reconstruction, right? And so I was lame, and I was like, well, why not? Let's go check it out, right? I went up to Kansas City and checked out his office, and the rest is history. I've been a loan officer since. So I was the 11th loan officer licensed in the state of Missouri. Now, I mean, we haven't always had to be licensed. I'm just not a procrastinator, right?
Sure.
So, I can always put that in my, that feather in my cap that I was the 11th. But and kind of we had kind of mentioned that loan officers kind of bounce around, and I don't. I've worked at Cornerstone, I've owned an Allied home mortgage, and I've worked at USA Mortgage. And I love USA. I think it's my 15th year here. We're an employee-owned bank, private mortgage bank, and this is our 25th anniversary this year. Will be our, so big celebrations, with us. And I'm the son of a military man, and I see that you do VA. You specialize in VA, but I grew up in the military, born in Panama, lived all over the world. And so I really get my work ethic and my customer service drive from my upbringing, right? When you go to any store anymore, it's like, they ask you to rate your service, and it's like, well, I did great. I checked myself out wonderfully. I get a 5, right? So a lot of people don't really understand customer service. And I want every one of my customers to feel like they are the most important person to me. And that's really the way I do business.
That's awesome. That's awesome. And so delineate a little bit more about that. What do you typically see as the experience of somebody coming in for a lending client or client coming in? Differentiate between what you would term a good client experience and one that might be, I don't know how you'd say it, maybe a bad experience or one that's less than, a good client experience.
I don't want to go out there and start projecting bad client experiences, because there are none. And every single person is different. And this, and I know this, and it's most, we don't know what they don't know, right? You can sit there and I try to tell people up front, I talk a lot. I'm all over the place. If you're tired of hearing me talk to you, do like my wife does and just tell me to be quiet, right? I mean, because I'm a teacher. I want my clients. I went through that 2007, 2008, that subprime where people were getting option arms and then coming to me and saying, well, we didn't understand this. I didn't do them. They, some other mortgage company might have given them an option arm or an interest only, stated income, stated assets. And so many people that got repossessed, we didn't understand. Well, then either you weren't paying attention or your loan officer and the title company did not do their job. So I don't want any of my clients ever not knowing the next time, if I'm not there to walk them through it, that this is not normal, right? If something, and I tell my agents, like, even if you get a lender from another company, if they're giving you the kind of runaround, just let me know what they're saying, I'll kind of give you a clue of what's going on, right? I mean, we don't like to give bad news. I don't. Um, but so I've got first time home buyers that think they know everything. I've got people that have bought 4 houses and don't know anything. And you're just, so each person you got to kind of figure out and mold the service to what they want. Some people don't want to be bothered, right? And I have a team behind me from underwriters to closers to processors, that it can be very streamlined. And these days, lots of people I found don't like to speak on the phone that often, right? They would rather text, email. I think I can get a whole lot more done in a 5-minute conversation than, a 2-hour text. But I will text them until it's just beyond, and I'll say, hey, can we jump on the phone? It's going to be real quick and easy. So, and by that time, you've had some kind of rapport with your clients. It's not like they're freaked out by talking to you at that point in time. But I apologize. My dogs are here and they think they need to protect the world from evil.
Ah, okay. Well, that's good. They do actually, in some ways. It may not be the timing for it, but it's good. It's good. Anyway, so yeah, and I didn't mean to say what's a bad experience to kind of point at the competition or whatever. Yet, what would you say you do differently or provide that sets you apart?
Oh, and as networking, I've networked for, and people that don't understand networking, it's going out and meeting people belly to belly and gaining trust through relationships, right? That's what it should be. Um, and with that being said, I've developed relationships, and through those relationships, I always try to sit down because I don't know who is a loan officer and who isn't. There's a lot of loan officers, a lot of insurance agents, there's a lot of real estate agents. I don't want to offend anybody, and I don't necessarily think I know more than anybody else. There's good loan officers at every single bank, and there's bad loan officers at every single bank. Their knowledge base and what they're willing to do to think sometimes outside the box to get you qualified, not just look at that credit score. I can look at somebody's credit score and look at their credit report. And I've had it this year. I closed a kid on the 15th of April that when he filled out an application in July of 2025, he had a 551 FICO score. I told him a few things to do and he did them, which kudos. Not everybody has the ability to follow through with that. And he had a 721 when he filled out an application in March of this year. So we're
Wow.
talking 6 months, 7 months, and not by paying somebody else to fix their credit, just by maybe tweaking a few things that you're doing, right? Um,
Sure.
so as far as, the good loan officer, bad loan officer, I say knowledge and the ability to communicate. I'm not the best loan officer for every single person. Um, I hope I am, but I can, I can't be that guy and think I'm that guy, right? I mean, it's tough. So I do the best job I can. Like I said, we're an employee-owned company. I can talk to my underwriter if there's a scenario that, because there's so many automations to lending right now. I mean, between AI and everything else, they're trying to get these calculations, and we've got these companies that'll do income calculations and guarantee them. If our loan doesn't get bought, they'll back it and they'll buy that loan. I don't like their calculations all the time. I'm used to arguing. I'm used to, doing my calculations and saying, no, this is what makes sense. This is a field that, I mean, it's not as busy in the wintertime. I mean, if we're in construction, or, Silver Dollar City, right? I mean, we've got places around here where people don't work as much, but they work more in the summer. Um, so I want to be able to talk to my underwriters, which I can, and my team, and be able to make that make sense and say, hey, what do you need me to put down on here to make this work? And I've got a tremendous pull through You know, I mean, I can't underwrite and approve and deny a lot, but I've got a tremendous pull through on what I do get qualified, uh, as far as that is. And again, I apologize.
It's okay. Uh, so what do you see trending in the lending area? Rates have been uh, well, they were high for a long time. Then they went down a little bit over the last few months. And where are they today? What are we seeing now?
We're seeing, I mean, mid six. I mean, and again, I mean, I can get you any rate you want to if you want to buy it down. I mean, those people that are out
Sure.
there on the internet that say 5.5, well, you're buying some points, you're paying some money to get that. And is it worth it? How long are you going to live there? These are the questions that LOs need to talk to their clients about. What is going on in your life? Are you just going to be here for 2 years? Here's your break even if you're buying this rate down, right? Um, but what I see going on is, well, some people don't. So the interest rates for mortgages are tied to the 10-year Treasury, right? And back
Yep.
when they were at 2%, the Fed was reinvesting every single penny back in. So, Fannie Mae, Freddie Mac, everybody has Fannie Freddie unless it's a portfolio loan. And all that money that they were getting paid for every month on a payment from Wells Fargo, US Bank, whoever, Penny Mac, they were investing back into the bond market. So they were artificially reducing the interest rates, right? They were keeping them low. Unless something like that happens, and I've heard talk that we're going to start reinvesting into our bond market. And truly, I don't expect that rates are going to get really much better than 5. I mean, and I think if we can get 5, I mean, and this is just my opinion, everybody doesn't. I mean, I'd love to see some more affordable housing being built. I'd love to see more 200, $300,000 houses being built. I understand the builders are having to buy lots. I understand developers are costing money, but there's a lot of really expensive houses out there, and there's a lot of people that just don't make the money to be able to afford that payment, right? I mean, and that's just my soapbox, right? I'm not a builder, so I can't do anything about that.
Understood. Understood. In as far as the lending industry, are you seeing consolidation of lenders? Are you seeing any other things that are happening that might be considered trends in the marketplace?
I don't try to, I mean, I watch MB as highway. I mean, I keep up with things. I know that there's a national trend of declining. I'm bringing a kid on and training him here pretty soon. And, I mean, I want him to be able to be like me. I want people that care, right? I want to be able to handpick. I don't want to run a team again, but I am bringing him on. A friend of mine asked me to take him on and teach him the ropes. Um, but so yes, it's not an easy industry to get into. I mean, I mean, like you said, you've always got headhunters out there trying to get you to go. And when you jump, you know, eventually it's going to catch up to you. And I just feel like hang your hat in one spot, and be happy with what you got, because it's not greener, or they wouldn't be looking for somebody. If it was as good as they promised, there wouldn't be having to promise you all of that. Everybody would be running to them and nobody would be quitting. So, yes, there is some exodus, just like with real estate agents. There's some exodus in that, right? And I mean, you can drive through neighborhoods. I was driving today. My daughter asked me to go check her skylights because of hail. And I was wrong again. I never heard of hail going through a skylight, but over they went through, and I'm like, I called a roofer. Said, hey man, get over here. Um, but there's going to be hills and valleys in every industry, and I saw more real estate signs today that made me feel more comfortable about. There's more people finally getting it right. I remember when rates went up to 4%, and people were, oh, we're going to hold off on buying, right? And then they went up to 5% and 7%. Prices on houses doubled. Those people that waited, unfortunately, lost the interest rates, and they lost 100% equity in a lot of cases in the houses they wanted to buy. So lots of people ask me when the best time to buy is. I say the best time to buy is when you find something that you and your spouse, partner, whoever can agree on, and you both love it and you can afford it. I would not ever want to encourage anybody to buy more house than they can afford. You still want to be able to go out and take a date night, have a pizza. You don't want to be sitting across the living room from somebody, bitter because you can't go have a beer, right? I mean, it's so, as far as real estate, it's always going to be around the people that, the ones that want everything now, they'll come and go, right? And the people that care are the people that stay around in the business.
What are you seeing in the first-time home buyer market? Are you seeing increase or decrease in the number of first-time buyers? What are you seeing?
I do a lot of first-time buyers. I mean, most of my business is repeat business and first-time home buyers. So I see a lot. I mean, I've got, I had a 56-year-old lady that I closed earlier this month, first-time home buyer, tickled to death. Tickled to death.
Wow.
I know. And it's good. I mean, she'd never owned before. She had always rented. And some circumstances happened where it gave her the ability to, grab a small down payment. And she had never really thought, right? I mean, because the media, people listen to stuff and they just think it's not possible. And if they would just talk to the right people, they would find out what's possible. And this. I mean, it's incredible what people, have in their mind, whether it be about bankruptcy or this or that. It's just like most of it's not true. And if you just talk to somebody that knows, not, drunk Uncle Richard at the Christmas table, just because he's loud and he says it with authority doesn't necessarily mean it's right. Right. I mean,
right.
So, but yeah, I've got a lot of first time home buyers, and that's, yeah. that and people splitting up, right? Dividing households. So, I mean, it's not a funny subject, but sometimes it happens. And a lot of people, once they're homeowners, when you own a home, you've got more wealth than, 70% of the rest of the country, right? That's just homeowners, right? We're investing into our future. With that, it's a little crazy that how quickly, you can build up equity in a home. So,
do you have some products available for non-warrantable condos?
We do. I don't do a lot of condos. I would hand those off, but we do. We have products for everything. We also have the ability to broker. Now, I will tell you this, and I tell all of my clients this, and you will know because you've kind of been in the business. Reputation is everything in this business, right?
Yes.
When you're hello. And so when I broker something, I have zero control over it. I can call, I can whine, I can cry, I can kick, and it doesn't matter. That AE, I don't know that they know any more about their product than, selling a 50-cent tire. But that's just my opinion, and, it'll be out there. Unfortunately, there's not a lot of AEs out here for banks in the market, but they'll promise you everything, and they'll get you in there and they drag it. So we do bank statement loans. We do, 12-month bank statement loans. We'll do, business bank statements. I can combine the two. There's not a lot that we cannot do. And I will tell my client up front, if it's a brokered loan, I'm going to tell them, it's a brokered loan and we're going to have to jump through hoops. I'll be here to jump through them with you. And you're going to get frustrated more than likely, but they're just it's not like the old days of the subprime 580, you can breathe, let's give you a loan. They are dotting their I's and crossing their T's, and they don't want to lose their money. So they're, in higher interest rates, and, business owners hate that. And it's just like, I mean, it's like when you don't have great credit and you go to a car lot to buy a car that's a buy here, pay here lot, you're kind of under their thumb of what you're going to pay for that car. And with the brokered loans to these companies, I'm at their mercy. I don't choose the rates. So it's not something that I really delve into that much. I do it if somebody comes to me and says, hey, can you do this? I will say, yeah, I'll try to find them somebody better, right? If I don't close the loan, it doesn't mean I'm not going to do the best for my customer. If there's another company that I know or another loan officer, and that's why networking is so important as well. I mean, just because I want to talk to other loan officers, I want to know what they do, what their specialty is, what they hang their hat on, right? Because if they can do a construction loan better and cheaper than me, hey, I want my customer to be in the best hands possible. And I believe it will truly come back. Maybe not with that customer. Maybe I'll lose a relationship, but it will come back to me because, money's not everything.
Right. Right. Okay, good. Well, we've covered good things. I understand the rate's a little bit better, condo, on non-warrantable condo, issues as well. First time home buyers.
Yep.
Overall volume in 2026, are you like first quarter, which ended beginning of the month? Are you seeing anything different than 2025 or as far as volume?
Yeah, the phone's ringing much more, which is nice, right? It's very nice to get the phone ringing. Now I'm busy with everything else, and you got stuff that comes up like surgeries.
Yes.
But it's good. It makes the week go by much quicker. It makes the day go by. I'm not worried at the end of the day of, where the next meal's coming from, as a lot of people in, this industry are. It's sales. At the end of the day, I know how to get somebody on paper and to get them qualified. It's getting the people in my door and getting that application taken is the biggest part of what my job is, it's not just getting them to the finish line. That's the fun part for me. That's the best part for me. It's actually getting people to make that phone call or fill out the application. So, and it's up for this year, and I'm glad about that. Let's knock on some wood.
Well, that is great that it's up. I'm glad to hear that. And on that note, in talking about applications, what's the best way if some of our listeners may want to go ahead and get qualified? And one of the questions that a lot of people have is this going to affect my credit? Would you just briefly talk about that if they make an application?
Yeah. And so, yes, it's going to affect. It's a hard pull, but you shouldn't be worried about that. I mean, you can have, not that I would, but just a little bit about credit. If you go to a car lot or apply for 10 credit cards, you've got 10 different banks pulling. When you're pulling for a mortgage, it's all understood in the computer at the repositories that are creating your credit score. This is a mortgage inquiry. They know you're not going to go out and get 6 mortgages, so it doesn't ding your credit that much, right? I mean, opening up a new credit card account for the first 12 months is going to ding your credit a whole lot worse, right? Or opening up a car loan. And for the first 45 days, you can get your credit ran by as many mortgage companies, and it will not affect it any further without that initial, 1 or 2 point drop. But historically, I have not seen it drop somebody's credit score by more than 1 or 2 points to fill out an application. And unfortunately, and these are things that a lot of people don't know. I mean, how I talk about everything has gotten more expensive. I mean, it is unbelievable what we're spending on credit reports. And for a soft hit, it costs us just as much for a credit report as it does for a hard pull. And at USA, are constantly shopping to save money because we're an ESOP, we're an employee owned company. So the more money we save, the better it is for us. And I think we're spending about $235 for one credit report for two people. And I mean, that is silly as far as I'm concerned. And I mean, that's cheap for the industry. There's a lot. I mean, so when you start pre-qualing people and you've got 5 people that don't qualify, well, there's $1,200. I mean, it goes pretty quick. So I try to talk to people. I want to know what they're thinking, why they think that way. I have a conversation with all of my clients before I pull their credit, right? Because either I'm going to have a conversation. It sounds like you've looked at your credit. You kind of know what it is. I'd like to look at it to see how I can help you build that credit score in as quick a time possible. Or it really sounds to me like you're worried about nothing and your credit score is probably pretty good. Because Credit Karma is not a FICO score. Now, that is something that's supposed to change fairly soon. Credit Karma uses a Vantage scoring program, and it's not a FICO score. We have to use FICO score right now in the lending business. We're supposed to be transitioning over to use both. The problem is DU and LP, or Fannie Mae, Freddie Mac, they're having to rebuild their systems to accept those Vantage scores. And Vantage scores, I haven't researched them a lot. I mean, you hear so much on a day-to-day basis, but for a shorter, FICO scores really love long history of credit. A Vantage score is going to give you a little bit higher score with a shorter time frame of history. So, I mean, a lot of times they'll give you a better credit score. And if we can use that, we're going to. I know that's coming down the road and it should happen in 2026. I think it already has. Nobody has it implemented into DU and LP yet. As soon as they do, that will be something that's very helpful to people that have not as deep of credit, right? I mean, younger people that may not have 20 years of credit history, but yeah, there's a ton of things out there that people just don't know that we can do. We can build credit. I mean, a bad credit score is worse a lot of times than no credit score. With no credit score, I can build it. When you got a bad credit score because maybe a medical bill, it's hard to get that removed. But what I say to everybody is just get with a professional. I mean, get with somebody that knows what they're talking about, that you trust, and have them help you walk you through the process and create a map for you to reach your goal, right? I mean, back in the day, you wouldn't drive to California after, without GPS, right? I mean, you wouldn't go and just, hey, I'm getting in the car, going to head west. I mean, it'd take you a long time. You might make it, but you might not get to where you want to be. So.
Very good. Yeah. I love that. Well, Mike, is there anything else you'd like to share with us before we close things out? We really covered a lot of great ground here today, and I appreciate that.
We have, and I would be happy to talk to anybody, and they can get me on my cell phone at 417-693-3595, or look me up, Mike Duncan, USA Mortgage Mike. I can get them. I can talk to them. We can figure out if now's not a good time. The one thing that I hate to hear as a lender, and the one thing real estate agents really hate to hear as a real estate agent, is a call saying, I've fallen in love with this house. I've been waiting for it to go on the market for years and years and years. It was right next to my family home. I want to buy it. And they're 8 months out, right? I pull their credit and they're 8 months out, and they're disappointed. They're heartbroken. Look, if you anybody that thinks they might want to buy a house in the next 2 weeks, 2 years, get with somebody, call me. I would be happy to help you and walk you through that. And if you don't like me, there's other loan officers out there. Just get with somebody that can be honest with you and has good reviews, is what I would say.
Okay. Yeah, absolutely. Well, that was my next question, to give out your phone contact number, and you did that. So that's great. You did a great job. So, well, Mike, thanks again for being on the podcast. I hope to connect with you again soon, and I really thank you for being here. I appreciate it.
I appreciate you, Paul, for having me on, and yeah, let's get together. I'll
I will.
I'll come down to Branson sometime soon.
Yes, sir. Yes,
All right.
sir. Come to my office. I'm at 269 Highway 248 right here. So thanks again for being on the podcast. We'll see you soon.